Hi, Todd VanDenburg here with VanDenburg Capital Management and another uncommon sense update. So as we wrap up the month of January, so far so good. January has been a pretty good month. We certainly appreciate that since December was not such a good month. But that's the thing about the stock market, right? There can be months when it's incredibly volatile, things go up rapidly or go down rapidly, and that's why we follow the fundamentals so closely to make sure that the volatility is just that, volatility, and not some fundamental issue with the market. Which brings me to the news of this week, which is getting all the press. It's our trade talks with China, and as the media likes to talk, it's a trade war with China. And I only have one thing to say about that, and I just don't agree that we're in a war with China. If you look at the most recent data that's available, we import from China about $522 billion a year worth of goods and services. We only export about $187 billion a year. So that means that there's a $335 billion a year deficit between what we buy from them and what they buy from us. And as a country, that's just hard on U.S. companies trying to sell their goods and services overseas. So what's really going on now is trade negotiations. It's not a trade war, it's trade negotiations. Now, some of the tactics that our government is using to try to get China to change its ways, some might view them as hostile or use other words that are disparaging. And I'm not here to comment on whether or how we're going about what we're doing is good or bad. But what I can say is that when we can only export $187 billion a year to the imports of $522 billion, really anything that we do to change that situation is good for U.S. businesses because it allows us to sell more of our goods and services overseas. So when we're looking at the kinds of things that are going on, really we're going to China and saying, hey, look, you can't close your markets to our companies, to U.S. companies who want to sell things in China. And when you allow companies to come into China, you can't steal their intellectual property, and because that's just not right and it's not fair. And so these kinds of negotiations are basically trying to create a more equitable trading environment between the U.S. and China. And China's made some comments here recently that lead me to believe that they're at least heading down a path of trying to improve the situation. Now, again, the media wants to talk about it like we're being so mean and we're going about this in all the wrong way. And what I want to give you is one quick example. Right after Amazon bought Whole Foods, they went, everybody was all, oh, Amazon owns Whole Foods now and it's going to be all good. You can use your Amazon Prime at Whole Foods. But what also happened at the same time is Amazon, through Whole Foods, went to the suppliers of Whole Foods and said, hey, just want you to know that, we love your stuff, but we need better margins. We need to make a little more money off of the goods that we buy from you and sell in our stores. The suppliers lost their minds. What do you mean? We can't possibly do that. And long story short, Whole Foods says, well, we can always sell your competitors' stuff if you'd like. And suddenly the suppliers sort of caved in and, they got better margins. And if you look at the profits for Amazon, Amazon's profits are doing pretty well. So these are really similar situations. And it's something I try to do a lot, which is stop thinking about these really large numbers, billions and trillions, and try to back it down to, just real life, like how we would deal with things in real life. And in real life, if you are the biggest buyer of something, you have the power to sort of dictate terms. Now, you can't make somebody sell something to you at a loss, but you certainly can, with your buying power, get them to do things that they otherwise wouldn't do for somebody who just buys a little bit of their product or service. And that's what's going on with China. We buy way more from them than they buy from us. They need us way more than we need them. So these negotiations are really, in the long term, good for the U.S. economy, assuming that they end up in a favorable place, which I sort of expect them to. But the process of making an omelet can be messy, and that's what's going on now. So don't be too worried about China. The news and the media sort of talks about this stuff in the most hyperbolic ways, but this is just really normal business. We want a better deal. We're a bigger consumer of their stuff than they are of ours. We want a better deal. So that was your update. I hope you enjoyed it. If you did, give us a like, give us a share, and I'll be back next week with another Uncommon Sense update. Thank you for watching.